Video. Today we're going to do our normal weekly market breakdown, and as always we will be focusing on the dollar index pairs for this week. So we are going to take a look at the Usdcad as well as GBP USD, Euro USD, Usdjpy, Usdchf, and obviously look at the dollar index as a further reference. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, last week we obviously had some positive data that came through for the dollar index. We had a CPI at 0.3%, core CPI at 0.6%, the PPI came through at 0.5%. And as a result of that, we can continue to ride on the back end of the dollar index there as well. Now we're going to start with the dollar index as a standalone. So starting on the monthly time frame, what do we see? Now we can firstly see how the market had broken above this very important level of resistance, came back to test it as support, and we can definitely expect the market to continue higher, to go and potentially go and hit this level over here in the market there as well. So this is potentially the level that we can expect the market to test first before we could potentially see any pullbacks take place. Now if you drop down on the weekly time frame, what do we see? Now from a weekly perspective, we can see the market has been quite bullish. We broke above multiple structures, but there's definitely a slight pullback expected before the continuation. Now if you drop down on the daily time frame, what do we see? Now firstly, we can see how the market had stuck within this consolidation. Now not only was this a consolidation, this level over here acted as a strong level of resistance. Once resistance gets broken, it becomes support. So we can definitely expect that pullback in the market to take place before that continuation. We also have this massive impulse. Now after an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of the impulse. Now you can see how the 0.32 is lining up perfectly with this previous level of resistance that is now acting as support, giving us a further confluence that we can definitely expect the market to pull back before that continuation as they're in there as well. So going into next week, we can, probably within the first week, within the first day or two, we can definitely expect the dollar index to weaken slightly and then continue that bullish momentum. Now next up we do have Usdcad over here. Now if you start on the monthly time frame, what do we see? Now the Usdcad had been stuck within this level for quite some time. Firstly, we can see this level over here acted as a strong level of support. The market broke below that, came to test it as resistance. However, the market had also broken above this strong level of resistance and came to test it as support. Now because we expect a pullback and the bias is bullish, we can definitely expect the market to pull back for the continuation to the upside. Now if you drop down on the weekly time frame, what do we have? Now from a weekly perspective, this was the structure that the market had created, or should I say the part of the consolidation phase that the market had traded in. The market had broken above that level, came back to retest it there as well, but again we can expect a further pullback before the continuation to the upside. Now on the daily time frame, the price action is quite interesting because why? If you look left over here, you can see that the market had broken above this level over here. Now not only that, but we can also see the market had broken above this most recent structure. Now in doing so, what the market had also done is the market had also printed in information. Now after the information, you expect to pull back to the neckline. So this is the information that I'm referring to here. Now after the information, you expect to pull back to the neckline before that continuation to the downside. So going into next week, we can definitely expect the dollar index to slightly increase in value and then start that continuation to the downside. The market also printed the resistance, broke above that, came to test it as support, but an information is considered a bearish pattern from a technical perspective. So there's possibly a pullback expected before we can see the dollar index continue slightly lower and then start that continuation of the bullish momentum as identified from the DXY on the monthly time frame there as well. So that next up we are going to take a look at GBP USD. Now starting on the monthly time frame, what do we see? Now firstly, we can see how the dollar index GBP USD is currently testing very strong monthly support. Now because according to technical analysis, we can definitely expect a slight pullback before the continuation, because as I said, the market is currently testing a strong level of support in the market there as well. Now here on the weekly time frame, what do we have? Now from a monthly perspective, here on the weekly time frame, we can see how the market broke below the strong level of support. Now it would be very dumb of us to think that the market's going to pull back to that level, before that continuation to the downside, but we can definitely expect a slight pullback potentially to this previous level of support that got broken, that is now turning resistance. We drop down on the daily time frame. What do we see now? Here from the daily perspective, we can see how the market printed this massive impulse. After an impulse, you expect a correction. If you take your Fibonacci there from the high to the low of the impulse, you can see that we do have a potential 61.8, so like that. We do have a potential 61.8 lining up perfectly with that structural level in the market, or that structure that the market had created over there as well. Now, there's definitely a possibility that we can expect the market to pull back slightly, either to this level or at least to the 0.382 of the Fibonacci taken on this daily impulse over here, because we always expect the market to pull back to at least the 0.382 after the market printed an impulse. Now, the best way to approach the situation, obviously, there is a big possibility that the market is going to continue higher. The question is only up until where. So the best way to approach that is to, obviously, you have to monitor price action, from a daily and a lower time frame perspective, to make sure that you are aware of when the market momentum had shifted there as well. Next up, we are going to take a look at is the Euro USD, and the Euro USD also kind of the same price action. Here on the monthly time frame, the market is currently testing strong level of support. Again, we expect that slight pullback in the market. And then on the weekly time frame, what do we see? Apart from that, we also have the same, like I said earlier, we've got the same price action as we have on Gbp. So we have that impulse. We expect that pullback to at least the 0.382. This should be another at least to the 0.382, which will be located at this level over here. Alternatively, like I said, we could potentially see the market pull back to the 61.8, which is lining up perfectly with that previous level of support there, that is now acting as a level of resistance. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, it's very important that we need to keep this level in here, intact over here, So the way that we are going to approach the situation is quite simple. Now, the question is this market going to pull back? Yes, it is. This market's going to pull back to that level over there, potentially slightly higher. Now, it's important that we do monitor the price action from this level over here, because we could potentially see a break above this level, which I don't foresee happening. But if we do get a break above this level, then we can definitely expect the market to continue higher and then and then start this move to the downside. But from where I stand now, this is exactly what is going to happen next week in this market as well. Now, if we also measure this massive impulse and that correction over there, we potentially do have that 61.8 as we've got on Gbp USD there as well. Next up, we are going to take a look at the Usdjpy. Usdjpy here from a monthly perspective. Excuse me. So Usdjpy, I've been speaking about Usdjpy, and there's still a massive continuation to the upside expected to 135. Market is quite bullish, monthly bullish. Market broke above the strong level of resistance, never came back to test it as support. I don't think we are going to come back to test it as support again. Once again, last week we had we had the market close in that bearish, because we saw the dollar index slightly pull back after that massive impulse and the break of that consolidation. From a daily perspective, we have got the market had now obviously broken and closed above the structure, giving us a further confirmation that continuation to the upside is that definitely expected there as well. Not on the weakening of the dollar index, but on the weakening of the Japan yen there as well. We had a level of resistance over here that got broken, acting as support then got broken, became resistance. The market broke back above that resistance. All of that resistance is now once again acting as a level of support. Now, the best way to approach the situation is quite simple. We are going to wait for a pullback to this level and then start looking for that continuations to the upside there as well, potentially holding it to 135 in the long-term market for us also. Next up, we are going to take a look at is the USDCHF. Now, USDCHF, if we start here on the monthly time frame, what do we see? Now, from a monthly perspective, you can clearly see the market is currently testing the strong level of resistance. We had this massive overextended W formation, giving us a further confirmation we can expect that pullback. The problem is we won't be able to expect a pullback to this level. However, we can, if you look left over here, the market had printed this weekly level of resistance that it had broken out of, and all of that resistance is once again turned support. Now, next up, we do have on the daily time frame for USDCHF. Now, we can obviously see that this level over here was the most recent structure that the market had broken above, that acted as a strong level of resistance. Now once resistance gets broken, it then becomes support. Now we are going to wait for this market to pull back into that level and then start looking for that continuation to the upside. Now if you enjoy the video, please smash that like button for the YouTube algorithm, and if you do want to share the video with other people that you think would like to know of this information out there as well, you are free to do that. Thank you for your time, and as always, cheers for years.